Financial. This is the show where we forge stronger portfolios by hammering through the market's noise. And today, we are firing up the forge to dissect one of the most, frankly, explosive earnings reports we've seen this season, Palantir's Q4. Now, this company has been an absolute battleground for years, and these new numbers, they've just thrown a whole tanker of gasoline on that fire. So our job today is to stress test this report. We're going to hammer on the data until we find out if Palantir is really built on a foundation of solid steel or if it's just glittering with a whole lot of market hype. Let's get right into it. And we're going to start with this statement right from the top from CEO Alex Karp. Look, this isn't just confidence. You have to understand that. This is a declaration of complete dominance. We are an N of 1. Now, if you're not a stats geek, that's a term that means a sample size of 1. He's literally saying there is no one else. There's no peer group. They are a unique category unto themselves. It's an incredibly bold, you could even say arrogant claim. And so now we have to see if the raw materials, the actual numbers, can even begin to back that up.
And of course, this is what happened. The market reacted instantly, a pop of 8% in after-hours trading just like that. But see, that's the knee-jerk reaction. That's the initial flash of heat. And here at Iron Financial, we don't chase heat, right? We analyze the underlying structure. That 8% pop, it raises the stakes immediately. Is this the smart money seeing a real fundamental shift in the business? Or is this just the madness of crowds getting way out over its skis on a company that, let's be honest, is already trading at a breathtaking valuation? This one number, it sets the tension for our entire analysis today. Is the foundation actually strong enough to support this sudden new height? Okay, so here's our battle plan. First, we're going to look at the earnings shockwave. Then, we'll get under the hood and see what's forging the growth engine. After that, our skeptic here will be stress testing the foundation to find any cracks. Then, we'll look at their blueprint for 2026. And finally, we will deliver the Iron Financial verdict. Let's do it!
All right, Section 1. Let's just call this what it was, a seismic event. You know, Wall Street had all its models built, they had their expectations carefully set, and Palantir didn't just step over the bar, they took a sledgehammer to it and shattered it into a million pieces. This wasn't a simple beat. This was a fundamental shock to the system that sent analysts everywhere scrambling back to their spreadsheets. So let's look at the raw data of that impact.
You really have to appreciate the sheer force of this beat. Just look at these numbers. Wall Street was expecting what, $1.34 billion in revenue? Palantir comes in and delivers over $1.4 billion. That's not a rounding error. That's a nearly $70 million surplus. Then you look at earnings per share. Analysts had it modeled out at 23 cents. Palantir delivered 25 cents. Now, in the context of a company with this high evaluation, under this much scrutiny, this is a statement. This is management delivering a clean knockout blow to all the whisper numbers, and it's them proving their execution is operating on a totally different level than the street was even prepared for.
All right, so now we move from the shockwave right into the engine room. I mean, top-line numbers are great for headlines, sure, but they don't tell you a thing about the quality of the machinery. This is where we separate true industrial strength from just a flimsy facade. We're going to break down the core components of Palantir's growth right now and see what is really, truly driving this incredible acceleration.
I mean, this chart just shows you the sheer horsepower we're dealing with. We are talking about 70% year-over-year growth. Look, for a company of this size, 70% isn't just growth. It's a fundamental re-acceleration of the entire business. This isn't an engine that's just, running smoothly. It's an engine that just got a massive supercharger bolted onto it. They found a whole new gear, and the big question becomes, how long can they keep the pedal slammed to the floor?
So where is all this new power coming from? It's coming from right here, 137%. That is the year-over-year growth in their U.S. commercial revenue. This is the high-octane fuel. For years, the whole story, the narrative, was that Palantir was a government-first company. Well, this number just shatters that narrative. Their artificial intelligence platform, what they call AIP, is clearly being adopted by corporate America at an absolutely blistering pace. This is like a second, even more powerful engine coming online right before our eyes.
And that commercial turbocharger, it is powering the entire American business. 93% growth in total U.S. revenue. And this is what's really key. This shows that the commercial acceleration we just saw isn't happening at the expense of their core government business. In fact, the government side is also accelerating at a massive 66% year-over-year. So what you're seeing here is a story of just overwhelming domestic dominance. Both cylinders of the U.S. business are firing hotter than they ever have before.
And this brings us to what might be the single most impressive metric in this entire report, 127%. That is Palantir's Rule of 40 score. Now, for those of you who don't know, the Rule of 40 is a key benchmark for software companies. It measures their ability to balance aggressive growth with profitability. You just add the revenue growth rate to the profit margin, and if that total is over 40, you're considered a lead. Palantir is at 127. They're not just breaking the rule, they are obliterating the entire scale. This demonstrates a really rare combination of hypergrowth and extreme profitability. It's just off the charts.
And this slide really visualizes the fortress they are building here in the United States. I mean, look at that balance. 53% government, 47% commercial. It is almost perfectly split. So you have the established, deeply entrenched government contracts that provide this bedrock of stability. And then, right alongside it, you have this explosive hypergrowth commercial business acting as a massive catalyst. It's the perfect fusion of a fortress and a rocket ship. Both of their core U.S. engines are not only firing on all cylinders, they're almost equal in their massive contribution to the whole thing.
Okay, hold on. Whoa, let's pump the brakes for a second. The numbers are impressive, I get it. The growth is undeniable. But a skyscraper is only as good as its foundation. And when a company is priced for absolute perfection, which this one is, that is exactly when you have to grab the diagnostic tools and start looking for cracks. The bull case is clear, sure, but now it is time for a rigorous interrogation, because the higher they build, the more catastrophic the fall.
And really, this is the central question of the entire bear case. It boils everything down. We've seen the flawless execution. We've seen the acceleration. But guess what? The market has seen it too, and it has priced this stock into the stratosphere. So the question for any investor right now isn't about their performance, it's about the price. Are you paying a fair price for a great company, or are you paying a perfect price, leaving absolutely zero margin for any error? Is the price of perfection simply too high?
And here it is. Here is the first potential stress fracture we have to examine. 388. That is its PE ratio, its price to earnings, a really common way to measure how expensive a stock is compared to its profits. Just let that number sink in. By almost any traditional metric, this is an egregious valuation. This is the number that gives bears all their ammunition and makes even the most hardcore bulls a little bit nervous. You have to ask yourself, is any company, I don't care how fast it's growing, actually worth this kind of multiple? This isn't just a crack in the foundation. For a lot of people, this is a chasm in the entire investment thesis.
And look, don't just take my word for it. These aren't just my concerns. These are the big structural questions the entire market is asking right now. This slide shows the top 5 questions that analysts were all focused on. Can U.S. commercial growth of over 100% possibly be sustained? How much higher can these already high margins actually go? And notice the big one for me. Where is the overseas growth? It's all about the U.S. right now. This heavy reliance on one market is a major concentration risk that I don't think is being discussed enough. If any of these questions get the wrong answer in the coming quarters, the whole valuation argument could just start to crumble.
Okay, so the skeptic has laid out the potential cracks pretty clearly. Now, let's turn to management's response. This whole next section is about their forward-looking guidance. This is their blueprint. You can think of it as their direct answer to all those doubts about sustainability and valuation. They are laying out the architectural plans for what they intend to build. The question for us is this a blueprint for a durable, future-proof fortress? Or is it a blueprint for an elaborate and very unstable house of cards?
You know, the sheer audacity of this guidance is what's most revealing to me. You've got Wall Street analysts, the so-called experts, they all built their models and came to a consensus of $6.22 billion for 2026 revenue. Palantir's management just comes out and guides for nearly $7.2 billion. That is a 16% gap. That's almost $1 billion higher than consensus. Look, this isn't just guidance, it's a gauntlet being thrown down. It's management looking at all those questions about sustainability and effectively saying, you think we're going to slow down? We are just getting started. This is a statement of defiant confidence.
And, to reinforce their blueprint, it's not just Palantir making the case. This is where it gets interesting. Here we have a quote from a Citi analyst, Tyler Radke, and he's pointing to the external forces that are supporting the government side of the business. Significant tailwinds, accelerating defense budgets, and modernization urgency. This adds a really powerful layer of third-party validation to their story. It suggests that Palantir's government growth isn't just based on their own execution, it's based on a much larger macro trend, a ramping defense supercycle that could provide a strong, durable tailwind for years and years to come.
And this image, really it says it all. When you look at this picture of American sea power, you need to understand that Palantir is embedding its software, its operating system, deep inside this critical infrastructure. They're working on projects like the Navy's SHIPOS, which is designed to modernize the entire maritime industrial base. This isn't just about winning another software contract. This is about becoming fundamental, mission-critical infrastructure for national security. It's about forging a foundation that is as durable and essential as the steel hulls of these very submarines. This is the bedrock of the entire bull case.
So that brings us to the final analysis. We've seen the flawless execution, we've seen the explosive growth, and we've seen the confident blueprint for the future. But we've also stress-tested that foundation, and we found a valuation that is, to put it mildly, extreme. The tension here is palpable. On one hand, you have a company that is just firing on all cylinders. On the other hand, you have a stock that's priced for interstellar travel. So let's lay it all out one last time.
The bull case is absolutely built on bedrock. You have a generational AI platform that's driving explosive commercial adoption. That's buttressed by these fortress-like government contracts. And the whole thing is underpinned by truly elite, world-class financials, which we saw in that Rule of 127. It's a structurally sound fortress. But the bear case, it points directly to the cracks. You have an extreme 388 times PE ratio that just seems to defy gravity. You have legitimate questions about whether this level of hypergrowth, especially in the US, can possibly be sustained. And you have a notable reliance on that US market, with international growth still being a major question mark. It's a beautifully constructed tower, no doubt, but it has potential foundational weaknesses in its valuation. And that is where we have to leave you. There is absolutely no denying that Palantir is building the digital arsenal for the AI age. Their software is becoming critical infrastructure for both corporations and for countries. The execution, at least for now, is flawless. But the ultimate question for you as an investor, it all comes down to this.
At a valuation of nearly 400 times its earnings, are you truly buying the weapon itself, a piece of that essential world-changing infrastructure? Or are you just buying the hype that surrounds it? That's the verdict you have to forge for yourself.